Everything you need to get set for investing in the Dar es Salaam Stock Exchange this week, straight from the city of Dar es Salaam. Good morning, everyone. This is A Trader DSE Weekly Update. We appreciate your tuning in. We really do. Now let's get straight into it.
Let's start with the most liquid shares, which were shares that were the easiest to buy and sell last week. And they include the following. At number 1, we have Tanga Cement, accounting for 37% of the total volume traded for the week. At number 2, we have Tanzania Cigarette Company, accounting for 26% of the total volume traded for the week. And finally, at number 3, we have NMB Bank, accounting for 19% of the total volume traded for the week. Now, last week, the all-share index closed at 1,869.53 on Friday, which is a 0.95% decrease compared to 1,894.90 on Monday. This fall was mainly contributed to the fall in share prices, especially from companies in both of the bank, finance, and investment sector, as well as the industrial and allied sector. All right, now when we start with the bank's finance and investment sector, we can see that DCB was a top gainer this week. The shares had been quite traded a bit last week, which contributed to around 12.6% of the total shares traded last week. More information is to come about DCB Bank in the company news section. And we also see the price losers. Among them are CRDB and NMB Bank. They dropped slightly this week. Both stocks have already passed their dividend trading periods, so perhaps now this is the effect that is happening after. We also had some movement in the industrial and allied sector, and you'll notice that a lot of companies here, around 4 of them, had fallen in value over the last week. And the reason for that might be due to the fact that the demand for these stocks have just generally fallen, as there are less people willing to buy them at higher prices. Alright guys, now moving along to company news, we have DCB Bank, which held their annual general meeting on Saturday, on the 11th of June. They had released a notice of their 20th annual general meeting. And it was mentioned among the agenda that shareholders would not be receiving dividends related to the year ended 31st December 2021. The meeting was held at Limani City, which is in Dar es Salaam, at 9 a.m. Now, a few highlights of the bank's performance. Let's just take a look. Let's compare 2021 to 2020. And quickly in this table over here, we can see that their net profit for 2021 had increased by 205% from 617 million in 2020 to 1.8 billion in 2021. And so that also caused their profit margins to go up to 8.9%. We also see that their cost-income ratio had also declined by 15.4% from 95.74 in 2020 to 80.97% in 2021. They did not reach BOT's regulation of you have to have a cost-income ratio of 55% in order to be able to pay your shareholders dividends, and so that's probably the reason that they decided to not pay dividends to their shareholders. We also see NPL ratio had gone down, which is a good thing, by 18.6%. Okay, moving on to Treasury bond trading. Last week, there were absolutely no trades for the Treasury bonds, which offered the new coupon rates. And this is most probably because the new rates are much lower than the older ones, as we can see from the table above. Now, the most traded Treasury bonds last week were the 10-year, 15-year, and 20-year Treasury bonds. And let's look into each one of them to figure out how the demand or how the market for these certain bonds are. Beginning with the 10-year Treasury bonds, we see that they were traded at slight premium prices, with the most expensive traded at 117.3178. Now, these traded prices led to the corresponding yields we see in the graph, and the 10-year Treasury bond offering the old coupon rate exceeds the 10-year Treasury bond offering the new coupon rate by 10.40%. And we also see the 15-year Treasury bonds were also traded at premium prices, with the most expensive traded at 118.175. These traded prices, of course, led to the corresponding yields that we see in the graph over here. So the 15-year Treasury bond offering the old rate exceeds the new rates by 17.41%. Yikes. Now, moving on to the 20-year Treasury bonds, they were also traded at premium prices, but they were much higher than the ones for the 10-year and 15 years. You can see the most expensive one was traded for 135.279. Wow. This could be because maybe most investors in the DSE prioritize high cash flow returns over the overall profitability of the bond, which is the reason why they're willing to purchase these bonds at very expensive prices, even if it means them receiving a capital loss, which which of course also led to the corresponding yields we see in the graph over here. And also, just for more information, the 20-year Treasury bond offering the old rate exceeds the new one, by a whopping 21.89%. All right, and on 8th June, for the first time ever, the 15-year Treasury bond with the new coupon rate of 11.15% was auctioned for the first time, and here are the results. We see that it was undersubscribed by 32.7 billion, and now being undersubscribed means that investors came forth with less money than what the government had needed. This is largely because the current demand, as we've seen above, is for the Treasury bonds with the older coupon rates, which are much higher than the new ones. Now the minimum price to go through was 98.000, which is a discount price, as people are willing to pay less than the bond's face value of 100. All right, now over here we see the absolute last Treasury bond auction coming up for the government financial year ending 2021-2022. Thank you for choosing A Trader as your partner to financial freedom. Don't forget to follow us on our social media platforms to keep updated. Have a great week ahead, and karibuni sana.